This week's Crypto Recap. The market bounces back after positive news from the US Central Bank, and the world's largest asset manager launches a fund on Ethereum. We cover all of this right now in the Collective Shift Weekly Recap, actionable insights and a breakdown into the crypto market, all in under 30 minutes. We'll get things started with a quick market update here. And yeah, it was quite a volatile week over the past 7 days. We saw quite a bit of red in the crypto markets early last week. That was in anticipation of the Federal Reserve's meeting around the middle of the week. So leading into that, we saw markets selling off, just maybe, a bit of nerves there after, projecting ahead of whether the Federal Reserve might give a bit of a negative update, or negative in the perspective of sort of what crypto investors would like. Once that sort of meeting was finished and the Fed announced their policy decision, which was holding rates steady, which I think we spoke a bit about last week, that wasn't the surprising thing. Everyone was sort of, and speculating over what the comments would be from the chairman of the US Central Bank. And yeah, surprisingly or pleasingly for crypto investors, they were still quite, I suppose, what they call dovish, or still sort of, I suppose, looking ahead and expecting to be cutting rates this year. There was speculation out there, on the extreme side of things, that maybe the Federal Reserve, may not cut any rates this year. After going back 3-4 months ago, people were talking about maybe 6 or 7 rate cuts happening in 2024. But pleasingly, it wasn't that bad. And Jerome Powell came out and still said, 3 rate cuts of 25 basis points each happening this year would still be, where the Fed is sort of expecting things to go. Obviously, inflation is still around 3.2%. They really want it to get to 2%, but he really emphasized that, like, they're not in a rush to get it back to 2%. In other words, 2% is sort of like a medium to long-term target. And so long as it keeps trending in that direction, they're happy to sort of continue with rate cuts. So honestly, as soon as that came out, we saw crypto markets really rebound strongly. And now we sort of are ending the week with Bitcoin sort of climbing through the low 60,000s through to the mid 60,000s. I think at the time recording, it's at something like 67,000 US dollars as well. In terms of the ETFs, just quickly, this is actually very important as well. It was probably the weakest period for the ETFs since they've been live now for 9 weeks or so, 9 or 10 weeks. We've seen 4 consecutive days now of, I guess, net outflows. So if that were to continue, you would presumably sort of at some stage see these ETF issuers sort of selling off BTC to sort of level it up with their holdings. So obviously the complete opposite of what people have been sort of celebrating throughout January and February. But that's definitely one that's one that I'm personally probably watching the most closely in terms of a metric to gauge sort of where the market might be going in the future. So that's definitely all the important things you need to know about for the market for the past 7 days. And Nick, I'll hand it over to you for a very, very big announcement that hit the crypto market and crypto industry last week.
Yeah, this one's probably one of the most underrated announcements in a way outside of the BlackRock ETF all year, with BlackRock announcing a new fund that will be launched on Ethereum mainnet. So this is a tokenized asset fund known as BlackRock USD, which stands for the Institutional Digital Liquidity Funds. And they actually outlined plans to expand beyond Ethereum and looking at deploying on other blockchains. So they're working with Securitize to basically tokenize some of these asset funds on chain. It's just such a big moment because Larry Fink was quite vocal in early last year when they were posting about the Bitcoin ETF, talking about how he sees the future as tokenization. And I think everyone was really kind of wondering whether these were going to feature on their own private blockchains or whether we're going to see them make their way on public blockchains like Ethereum. So this was probably why it was such a big deal for me this week, because they really come out and said, hey, we really believe in tokenization and we are using public blockchains to test some of this out on, which was a big catalyst for Ethereum and even some other smart contract platforms who potentially could be next to see these big funds deployed. So it was about 100,000, I think, that people can invest in, and it's up to about, I think, 100 million deployed. So massive figures, and it's really marked BlackRock's real kind of interest in public blockchains, which hopefully this is a theme that continues on, Matt. I'm not sure what your big takeaway was, but I was just really keen to see them using public blockchains.
Yeah, that was probably one of the biggest points there. Not really using beyond their private sort of testnet or private mainnet. It was pleasing to see, hey, this is actually now being announced, and also what I really liked about this one was it was a simultaneous announcement and launch. So many times with these bigger institutions and just companies, when they're getting involved in crypto, they'll announce something, but the actual thing won't go live for 6 to 12 months. So that was a really neat sort of aspect of this announcement. And you can actually, go onto Etherscan now and actually look at the address that I guess represents the fund itself, which is really, I suppose, a coming of age moment in a way for Ethereum. And I need to pinch myself a bit to see how far we've come, in the last few years, really. If you told me,
it's one of those ones
that this would be happening, I would have said, nah, it's probably maybe happening maybe later in the 2020s, maybe early 2030s. But yeah, it's a really, really big milestone and underappreciated, I think, Nick, in the last few days.
And I kind of goes on about what I saw with one of the head of digital assets from Goldman Sachs. I think he was out on some of these panels on these big, I think, industry institutional events in crypto that happened last week. And he talked about how he sees the future as deploying on public blockchains. And I kind of really took that as a really cool moment, because a few days after that, we saw the BlackRock announcement. So I'm kind of wondering now, is this BlackRock asset funds kind of signaling we're at that chasm of these big, whether they're banks, whether they're investment funds, starting to cross into that area of public blockchains, which I think everyone is really excited for. And I think you're only going to be seeing more into the future as these blockchains mature, because at the end of the day, they need to be battle tested. And whoever has the, I guess, strongest network is where a lot of these funds will go to. So I'm really excited to see who's next, but it's also a big validation for Ethereum, because time after time again, we see these big funds, whether they're issuing asset management funds or they're issuing stable coins, they do deploy to Ethereum first and foremost, which I think really solidifies it as sort of leading the pack in that regard.
Yeah, definitely. Also, just finally on this, you might be wondering, why is this such big news, and what's the even point of these blockchain-based funds when, we've had funds and the digitization, I suppose, of finance happening over the past, 2 decades, 3 decades, really. Yes, it started a bit earlier than that, but really last 20 to 30 years, you've seen extreme growth in just digital finance. And yeah, they always talk about these asset managers like Goldman Sachs and BlackRock. A lot of the times, the first thing they cite when they're talking about launching a fund on a public blockchain like Ethereum is cost savings, just to do with the reconciliation and really just the back office sort of management of the fund and how it actually, functions, I suppose, and distributing, fees or collecting fees through thousands of holders, et cetera, et cetera. That is always the biggest point that they tend to mention. There's other benefits like transparency and whatnot, but I think at the end of the day, these big companies care and institutions care about profitability, and yeah, this is by far the biggest pull for them. So just if anyone wasn't aware, just before we get to the next story here, we've talked about this a bit on the podcast, just how you'll see trends happening within bull markets. Often there'll be a flavor of the week. We've talked a lot about how AI tokens, recently all pumped off the back of sort of WorldCoin. The Sam Altman's OpenAI was really getting back in the news, and we saw anticipation of NVIDIA. Sort of this week, after this BlackRock news, we saw the RWA sector, or real world assets, really strongly outperform. And I really just want to mention that just as another reminder of, if you are a bit newer to crypto, it can be a bit confusing how to understand how what drives price, because the end of the day, you've seen, the last 7 days, I can see Ondo is up 100%, Centrifuge up 50%, Polymesh up 80%. All of these RWA tokens are vastly outperforming the market, even though like none of them had direct links to BlackRock. However, the market's sort of front looking and being like, oh, will there be many more of these? Maybe my project that I've invested in might be eventually at some stage related. I know Aptos has also got ties to BlackRock, so that's also, outperformed by a lot. But that's just a bit of a reminder of how, bull markets can be very attention driven. That's a fact, I think, at this stage. But yeah, just don't go sort of chasing the next hot narrative, because you can find yourself having very little sleep and being left very confused, I think, by the end of the bull market.
Yeah, good point, Matt. At the end of the day, it's all narratives, and we'll see that as the bull market plays on. But keeping with Ethereum news, I saw that there actually was in some kind of controversy with the Ethereum Foundation with reports, I think, from CoinDesk about a confidential inquiry from a state authority. A lot of people were quite panicked at this news, seeing Ethereum, and then rumors around whether the SEC is going to be looking into Ethereum and ETH as a potential security. Do you have any more information? Is this something that's actually legitimate, or was it sort of blown out the water? I know there was a few different takes online.
Yeah, so this is like the news itself, as you just said, Nick, was reportedly a confidential inquiry from a sort of authority in the US. This all sort of came about by, I think, someone or a group of people sort of noticing that what's called a warrant canary from the Ethereum Foundation's website was sort of like removed. And it's sort of like a warrant canary is sort of like a way of sort of signaling that you have been, I guess, approached by an authority and asked for information, without sort of outrightly sort of stating it. And so that's what happened on the Ethereum Foundation's website. It has happened before, but I think that was a time when they sort of they did it accidentally, which I sort of remember that happening once I read that the other day. That was a few years ago. But like, that's really all that we know. So the foundation, for anyone unaware, it's a non-profit that's behind sort of the Ethereum project. And they don't really directly control it, but they have a big say in sort of, molding the protocol and like suggesting sort of what might happen in the future. And it definitely had more of a role sort of around the time of Ethereum's inception. So at the moment, we don't know any more information other than that, but I feel like it was notable that it came out sort of around the time when people are starting to lose confidence in, this ETF application or the odds of an ETF approval, which we might get to soon, Nick. But the timing, I think, it could be a coincidence, but I feel like there might be a bit more to that for the reasons that we saw this news come out when it did.
Yeah, exactly. I even saw SEC was in the news as well on, I think they were actually have to pay legal fees for a company called Tapbox because the judge actually said that they were going over their mandate and doing things they shouldn't have, which was another big loss for the SEC. So I think who knows who this is from, whether it's the SEC or not. But if it is, I'm really anticipating a real fight at the end of 2024 when we get a lot of these court cases, such as Coinbase, out there. And I think we're going to have a lot more to report on in the coming weeks and months, Matt.
Yeah, that's for sure. All right, onto this. The Ethereum application, speaking of which, it's sort of, I think we commented last week that it has been losing some, just confidence of its approval in May has been sort of decreasing. I saw there were sort of, that sort of continued last week on the back of this report that we just discussed. But was there any other notable updates from the Ethereum ETF sort of false space, Nick?
Mostly that we're seeing staking being added to a lot of these applications. So what a lot of people or ETF watchers were looking at was the ramp up on amendments as we head into the May deadline. As we saw with the Bitcoin ETF, we saw a lot of activity, which really signaled, perhaps a lot of interest and confidence that the ETF was going to get going. The opposite has been the case for Ethereum, with not a lot of talk, to be honest. And now we're finally starting to see some action, with Fidelity amending their application to allow or to introduce staking into their ETF, as well as Grayscale. This follows, I think, 21 shares and ARK Invest's application that included staking in February. And so we're seeing a bit of a ramp up in some of these amendments. But if we look to the market, or Polymarket, which is a prediction market for a lot of crypto activity, they're actually only expecting, well, the market is expecting about a 20% chance of an approval. Now, this is down from about 45 to 50% back a few months ago when the market was a lot more confident in this ETF. So the high level here is, I guess, with a lot of the confusion around ETH as a security now, and then we got this added probably hesitancy by the market, not anticipating we're going to see, staking or even an ETH ETF at all in May. So I think the hopes there are a little dwindled, especially if you're looking for that as a big catalyst for ETH. You might want to hold your breath or tune down your euphoria if you do think it might get going, because at the moment it's not looking too positive.
Yeah, for sure. I'm still hanging out hope that it happens this year before the end of 2024 is over. But yeah, I'd be quite surprised if it were approved in May or before May. So yeah, we'll keep an eye on that for sure, given how important it is and what we've seen the impact on Bitcoin be once its ETF was approved earlier this year. But for the time being, we'll head to this week's sort of big altcoin updates, continuing to see a lot from this space, whether it's in terms of launches of new altcoins or these more established altcoins putting together some major upgrades. Probably on the latter is a good example for you, Nick, to kick things off with an old project getting ready for a massive upgrade.
Yeah, so Stacks is one of the oldest Bitcoin projects out there. They've announced passed the major Nakamoto upgrade, which is years in the making and has important ramifications for not only the Stacks ecosystem, but also Bitcoin, because Stacks is one of the leading companies or blockchains trying to use that idle Bitcoin and try to introduce more utility to Bitcoin through its network that it's built on top, or harnessing the Bitcoin network. So this will allow Stacks to effectively have better trusted Bitcoin. At the moment, there's a lot of trade-offs you make if you want to take your Bitcoin and then put it onto Stacks. There's a lot of trust assumptions you may have to give up. With this new upgrade, it's going to make it more robust, and it's also going to introduce something called SBTC in the coming months, which is essentially the highest trust way you can at the moment, or we will be able to do, to bring your Bitcoin over and have all this added functionality on the Stacks ecosystem. So this is one that's big. I saw Stacks token, STX, had a nice bump higher. It's been one of the best performers this year. I don't know what, we talked about it a lot in a post I recently just talked about for our members on the platform, because I'm really expecting a big and explosive year for a lot of these Bitcoin projects built on top.
Yeah, I really loved that post you did last week, Nick, and yeah, sort of blew my mind of how many Bitcoin based projects are being built. It's well over 50 at least scaling sort of projects, and then chuck on all of the applications on top of that. There must be up over 100 Bitcoin based projects currently under development, which I think a lot of people will be surprised by once these go live in the coming months as the year goes on. So exciting stuff there, and Stacks obviously sort of leading the way with their Nakamoto release coming up very soon. Over on Solana, I wanted to sort of just highlight this, not so much a big update or big fundamental partnership or anything. It's more just something that I've noticed over the last few weeks as meme coin mania has found its place, well, on Solana as it has for a few months, but with the recent, I suppose, escalation in that sort of meme coin trading activity, we've seen the Solana blockchain itself be really stressed and stress tested, which is ultimately, I think, a great thing in terms of seeing where the tech may have some limitations, things to improve on, etc. But yeah, definitely in the interim, it's I think highlighted some just usability just challenges, I think, for the Solana network, with a lot of people now starting to see failed transactions. I was speaking to some members at an event that we did actually last week, and they were saying they're users of sort of Solana bots, like BonkBot is a popular example, and they were saying even their bots on the Telegram and whatnot are really always tend to be getting failed transactions, and it's increased, the instances of those have increased in recent weeks, and even myself just using Solana throughout, like, as recent months have gone on, I've been finding, the failed transaction rate has definitely been climbing. So, we've got some data here from Tom, which I'll get up on my screen, after this. But it's, really just showing a dramatic increase in the failure rate. So what does this mean? I think it's great. Solana's getting a lot of adoption, but I think this is sort of an opportunity for rival networks, such as like the L2s now, which have their Denkun upgrade has really lowered the fees. I think you're seeing Base start to get a lot of traction, and I guess it's a chain because it's sort of tied to Ethereum, and it just sort of has a lot more of a reliable, I suppose, user experience that, hey, my transaction's going to be sort of processed, so long as I pay enough fees. So yeah, it's something, I suppose, some hurdles for a very relatively young ecosystem that Solana is, but definitely notable and something I haven't really seen many people talk about, but I've just anecdotally had noticed it myself and speaking with other users as well.
I've been seeing a lot of data, and I think it's somewhere upwards of 70% recently had a big uptick in those failed transactions. So if you just think about 70% as of late of failed transactions is, especially for a blockchain that was meant to be the most user-friendly and have that real edge. Hopefully, I think we're going to see some smaller network upgrades throughout the year, and we'll see if that hopefully brings an end to a lot of this downtime or failed transactions.
Yeah, for sure. Because Solana's being so cheap as well to use, it often obviously attracts a lot of bots and just experimentation and whatnot, which has been a big driver of this failed transaction rate. But yeah, even as Tom says here, taking away the bots and whatnot, you're still seeing organic users, nearly 1 in every 5 transactions you're getting declined, which is not a sustainable sort of user experience. Obviously, as I said, growing pains, I'm sure they'd be working on fixes, but yeah, something to note for now. And if this gets worse, I think it's really notable just even from an investing mindset of trying to see if there's an opportunity for rival chains, even rival layer ones like Aptos, Sui, etc. Or if this can get patched pretty quickly, that would, in my opinion, be relatively bearish for those other, ones like Aptos and Sui. That's at least how I'm thinking of this. But yeah, really, I just wanted to highlight that here. What's the next one we got, Nick?
We've got Optimism. So Optimism have finally launched its prover on Testnet. So a prover is essentially just the thing that makes sure that everyone's playing by the same rules of the game on these Ethereum L2s and helps essentially makes them trusted. At the moment, the provers are just maintained by Optimism themselves. So it's a huge centralizing factor that a lot of people criticize Optimism for. Because essentially we have to trust that Optimism, is playing by the rules itself. With the launch of its prover, this means that it will improve the network decentralization and security, because now once it goes live, it'll allow not just Optimism, but a lot of other actors being able to make sure that everyone's playing by the same rules of the game. So this is just going to make them, I think, move to a stage 2 L2, which is a big step in terms of their securities. So it'll put them on an even playing field, such as Arbitrum, who already have this sort of feature on the network. And I think it's a real big catalyst and a milestone for Optimism once they do release it in the coming months.
Yeah, it's been a long time coming, and very technically dense, or a big endeavor to sort of get this out. So yeah, it's exciting time in the Optimism ecosystem as well. Speaking of sort of something that, can take a long time to come around, the Bitcoin halving we've got every 4 years or so, where we've ticked under the 1 month mark. So, roughly 23, 25 days away. So that is always adjusting based on sort of the hash rate and whatnot. But yeah, it's really coming up now. So we're almost in the month of April. So soon we can say it's happening this month. But yeah, another bit of an update there. All right, we will get into just 2 big things that we saw, Nick, in the past week. I'm going to go with what I think was underappreciated in terms of, I think, just awareness, was FriendTech coming out and announcing, I might just get it up on my screen here, announcing that 100% of their, I guess, token distribution was going to users. So this is something I can't really remember happening from any project. I'm sure it has happened before, but from an entity that has raised private venture capital, I suppose, like when that's your baseline scenario, I can't remember this ever happening in my sort of 6-7 years in crypto. So this is definitely notable. People are getting extremely excited about this, but one thing I would just note is that the 100% of the tokens aren't going to be released. I highly doubt they're going to release all the tokens at once. So it might be like 5% or 10% of the token supply will be airdropped to users of FriendTech at launch. I think that would be something that would be more sort of predictable. But nonetheless, you're seeing extremely high, I suppose, predicted valuations of the token price, I guess, or the airdrop value, I should emphasize, because no longer does the team have to divvy up the tokens like what they would typically do in any of the other hundreds and hundreds of projects where you get investors and the team allocation, ecosystem allocation, and then they leave some for the initial early users, which is normally 5 to 15% sort of depending on which project. So yeah, that was something pretty interesting there, and another sort of nice tailwind, I think, for the base ecosystem, which it's really started to heat up.
Yeah, thanks, Matt. My one will go out to underappreciated as well, about Japanese pension funds that are learning more about Bitcoin. This was one that I was really excited to see in the news. And Japanese is, I think it's called the Government Pension Investment Fund, GPIF, I think. And they're looking to invest into different assets. And they specifically mentioned Bitcoin to learn more about. So this is the world's largest pension fund. And I'm just really excited to see if we get more of these pension funds on board. We saw Fidelity look at trying to offer Bitcoin 401ks. And now we're seeing some of the largest pension funds in the world potentially looking into Bitcoin. Really excited to see who are already these funds, whether it's sovereign wealth funds or these bigger pensions, who may have already started accumulating Bitcoin under the radar. So I think we'll see a lot more in this in the coming months, if this is a trend that continued to has legs, because I think it's definitely something to keep on our radar.
Yeah, definitely notable and worth tracking for sure, Nick. Thanks for sharing that. Who knows what next week will hold, but we will wrap it up there. If you are looking for more insights, do definitely head over to collectiveshift.io/newsletter. That is your way to subscribe to our free weekly market insights delivered straight to your inbox every Friday. The website you want to check out, once again, is collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.